Now, sub-Saharan Africa continues to present a significant opportunity for investors. The region's demographics and significant headroom for economic development are among the factors which will continue to spur growth over the coming years. Investors that take medium to long-term positions in the region with careful asset exposure are primed to potentially reap better long-term returns. However, recent global and regional trends have posed challenges to investment opportunities in the region. The first ever Doing Deals in Africa reports from KPMG highlighted the trends in deal activity by region and sector, as well as the key drivers of activity. There was also a look into deal dynamics, the challenges and key risks, and of course, the outlook for the next 2 years. Joining me now is Dolapo Adeosun. She's Partner Transaction Services for KPMG Nigeria. Dolapo, welcome to Business Edge. Thank you so much for your time today.
Thank you for having me.
So when we look at the mergers and acquisitions, deals, activities in sub-Saharan Africa, we've seen impressive comeback, particularly from the pandemic era. And unlike the rest of the world, we're also seeing some record transaction volumes for 2022. So according to the report and the data you guys compiled, there were 297 deals announced last year, which is a 21% increase from 2021 and almost double the activity seen in 2020. While total deal value also fell sharply year on year last year, it remained within a range of annual aggregate value seen in the previous decade, and it reached $19.2 billion, which is a very, very big recovery from $8.6 billion in 2020. So let's start with looking at what's driving the recovery post-pandemic, particularly for sub-Saharan Africa.
Yeah, so as you would expect, with the pandemic came a lot of uncertainty, and so a lot of investors held on and didn't quite go and continue to make the investments that they were looking to make. However, what we have seen since the pandemic is the recovery that you just spoke about. And this is the recovery that we've seen across the regions, East Africa, West Africa, and Southern Africa, though the varying levels of performance in 2022. There are various reasons why the increase in M&A activity was recorded in 2022, but I'll speak to maybe sort of the top three. Our findings from the report is one, the evergreen investor interest in natural resources. Africa remains home to significant natural resource reserves. It accounts for 30% of mineral resource reserves, 12% of oil reserves, and 8% of natural gas reserves. This continues to be a draw for investors. And as noted in the report, 5 out of the 10 top deals were in this space, and 20% of the respondents also indicated that this was the primary reason why they made investment in Africa. So this will continue to be something that draws investment into Africa. But the other top two reasons or drivers found out from the research is attractive valuation. So at this point, a lot of investors see the valuations of our assets and targets as attractive. Could be a number of reasons. Number one, they're facing a lot of risk premium on the investments in this region. And what that does is, because the valuations are lower, there's potential for significant upside. And the third top reason given by investors was access to domestic distribution channels. And this we saw was particularly more of a pull for foreign strategics. So what we have is the number of strategics in trying to come into Africa will typically take the route of, a joint venture or just identifying partners that can assist with distribution. But once they have a more of a feel of, what the market looks like, what the demand is, and then you see them go the acquisition route to try and gain access to customers by buying or investing in businesses that already have, a customer base and a distribution route and a route to market. So these are, I would say, are the top three based on the interviews that was conducted with investors over the last 2 years.
Okay, so what we can see from the numbers is that we have rebounded in terms of being post-pandemic, but it also makes you question whether or not we would have seen even much better numbers if we had not experienced the pandemic. So I quickly want to get an idea of what bearing the pandemic may have particularly have in terms of the factors and the general global economic climate, the influence those two may have had, particularly on mergers and acquisitions for last year.
Yes, absolutely. What happened with the pandemic was the government then introduced a lot of stimulus measures. We had those in Nigeria as well to try and get the economy going. And so that happened across different geographies. And then the aftermath of that is we then saw rising inflation in even developed markets and rates not seen in over 3 decades in the US, in the UK. And to counter that, what the central banks, including the Federal Reserve, then did is they then introduced interest rate hikes to sort of counter and bring down inflation. Unfortunately for emerging markets, the implication of the interest rate hikes is that investors now have access to more secure, more stable instruments that are providing higher returns. And so what you will see is a lot of capital flows out of emerging markets, not just sub-Saharan Africa, but emerging markets in general. And this is a cycle that has repeated itself every time we see interest rates hikes, particularly in the developed countries. Now, with the capital flows out of Nigeria, or rather out of emerging markets, what you will have is currency issues, as we have seen, for example, with the Naira, seen in South Africa with the Rand, and a number of other currencies as well, feeling as a result of the impact of capital flows out of those economies. What you also find is a tighter monetary condition. So in order to sort of attract investment back into the country, you have to then start to see interest rates also go up in the local markets. So you start to also see interest rates go up as a means for attracting investment. So those are some of the implications of what happened with the pandemic. Okay. And then when you see foreign exchange devaluations happen, it has two implications, and I'll use Nigeria as an example. Number one is the performance of the portfolios that these investors currently hold, where your investment loses value immediately once the devaluation happens and occurs. The second one is with respect to liquidity shortages. What has happened is a lot of investors are not able to take their capital out of the country. And if you're not able to repatriate capital, then it makes it very difficult to have conversations for additional investments. Those are some of the areas where the impact of the actions taken post the pandemic have impacted M&A, and definitely would have impacted the flows even in 2022.
This in terms of the sectors, because what we saw with your reports is that Sub-Saharan Africa's energy, mining, and utilities sector saw the highest aggregate deal value last year at $7.8 billion. And the sector also recorded the region's highest deal volume with 64 deals in 2022, also matching the total for 2021. But beyond that, it's an idea of whether or not this is something that the energy, mining, and utility sector will be able to sustain. So two things, Dolapo. Do you think that this particular sector will be able to sustain its growth, particularly at the forefront of the mergers and acquisitions landscape on the continent? And then on top of that, I'd like you to also look at whether there was any sector from your report that didn't do exactly as well as you expected. We see the growth, the demographic figures, the potential, and the opportunities, but was there any sector that took you by surprise that wasn't performing exactly as you possibly would have expected, given maybe the noise, the information, and even the interest around it?
Okay, so thank you. I'll start with your first question with energy, mining, utilities. We expect that it will continue to be a major draw for investment in sub-Saharan Africa, just by the sheer size of the resources that's available. Another thing that makes it very attractive is these resources are priced in foreign currency. They're traded on global markets, and so it limits the dependence on local macro conditions. So maybe when you have other sectors that are dependent on demand in the local market, they're dependent on the currency movement in the local market, foreign natural resources are not dependent on those factors, and so continue to be attractive, and we expect it to continue to be a major draw for investments, even going into the future. However, we also expect, and we are starting to see other sectors gain a lot of traction as well. We talk about technology making a lot of impact, financial services, as well as consumer goods. So while we expect energy, mining, and utilities to continue to be a major draw, we will start to see more other sectors as well take a lot of front stand in terms of attracting investor capital into sub-Saharan Africa. And to address your second question as to any sectors that didn't quite perform as expected, I would say largely the findings of the report aligns with the fundamentals and what drives and what's attractive about Africa. So we saw the energy, mining, and utilities, like you said. We've seen a lot of investment going into technology as technology is revolutionizing in the next phase of growth in Africa. It's increasing access to the last mile. It's changing how sectors are delivering services to people. It's connecting people. It's connecting payments. And so we're seeing a lot of investment going into technology. Financial services as well. We're seeing financial services as the banks and the fintechs are just trying to increase and facilitate cross-border payments as well. Consumer goods, Africa's story is the size of its population, the youth, the size of the youth population that will continue to present a huge market in the region. So we see that most of the findings of the report in terms of the sector focus aligns with what the Africa story is. Are there sectors that we wish there was sort of more investment? I'll say yes. We would hope that sectors such as agriculture will start to see a lot more investments in agriculture, for example, that we saw. But it's a function of the state of the sector. It's a function of the fact that I'll speak more about Nigeria. It's still largely subsistent in nature. It's more informal, and there needs to be availability of targets that can attract investment. And that's what we need to do is to create an enabling environment so that we can have these companies thrive and then be able to attract investment. So largely, the sector findings aligns with the Africa story, but there are sectors that we hope to start to see more investments in going forward.
All right. Unfortunately, because of time, we have to wrap up. But I need to acknowledge the fact that South Africa was the source of 5 of the 10 largest deal by value seen in sub-Saharan Africa in 2022. And the biggest transaction was the purchase of a 55.44% stake in a private healthcare services group. So that will lead me to my final question to you, Dolapo. We've seen what 2022 had to deliver in terms of doing deals in Africa. What does the future look like? What expectations do investors have when it comes to deals in the next few years? And what are the trends, most specifically, that we expect to drive activity as well? If you can do this in 1 minute because of our time.
Okay, thank you. The outlook for M&A in Africa, in sub-Saharan Africa, is actually positive. 3/4 of the respondents are considering additional investments in sub-Saharan Africa. 68% of investors expect deal activity to increase over the next few years. 31% expected to increase significantly. So there's a lot of optimism about the M&A landscape in sub-Saharan Africa. And the things that we expect, based on findings of the report as well, to drive this include investment in technology, which I spoke extensively about, clean energy development. With energy transition, we expect renewables to attract a lot of investment over the coming years. And also we expect, consumer goods, consumer markets to continue to be a major draw as investors look to take advantage of the huge population that's becoming more and more connected through technology, through the likes of our regional integration ACTA. And so we expect that those things will continue to drive investments, and it's actually part of what is portrayed in the investor optimism that was noted from the research.
All right, Dolapo Adeosun, Partner Transaction Services for KPMG Nigeria. Thank you so much for joining me.
Thank you very much for having me.
Fantastic. And that's it on this episode of Business Edge. Don't forget to follow us on social media. We are at News Central TV. You can also head to our website, www.newscentral.africa, and even download our mobile app on App Store and Play Store to take us with you wherever you go. 12 p.m. West African time, we have News Central now coming your way with all the latest from here in Nigeria, around the continent and beyond. Till next time, I'm Tolulokwe Adileru Balogun. Do have a fantastic day.